Hello, my name's Grant. I'm the principal here at WildTech. Welcome today to our 30-minute lunchbox special. We have turned off everyone's background to minimize the noise, but at the end of the webinar, we've got a whole bunch of questions that we'll be running through. So we'll deal with all of those as we filter through to the end of the session. Today, what we're covering off is all about China and Taiwan and what companies are doing to basically overcome any supply chain disruptions and how they're using diversification and ERP solutions to move towards AI and ERP to assist in that. A little bit about ourselves, I think, a bit about WildTech. We are Australian owned and operated. We really do concentrate on digital transformations across a number of key industries. So manufacturing, retail, supply chain, professional services, and financial services are the areas that we really focus in on. We do a lot around process optimization and consolidation of disparate systems. So we'll look at the process from beginning to end to come up with the ideal solution, not just say, here's a finance platform or here's a planning solution, etc. And we also look at things from an end-to-end business application perspective. So in the event we're looking at retail, we'll look at point of sale, we'll look at infrastructure as need be, planning systems, etc. as we go through the whole journey. Okay, so that's a little bit about us. Overview of today. We're having a look at really what are the factors around the disruption that we're seeing in the global supply chain that everybody's been seeing and witnessing for the past 2 to 3 years. And we're also asking the question, are these future supply chains actually going to be decoupled? And by decoupling, I mean, are we looking at China not being the center of the universe when it comes to the supply chains? We're also looking at what companies are doing around the world over the past couple of years in responses to what's happening overseas, and particularly in Asia. And what does that mean, particularly for Australian manufacturing? The final point of all this is, how do we all bring this together to build a resilient future for all the companies that are involved out there, but also for Australian manufacturing and supply chain businesses? Okay, I love this slide. This really paints the picture of what is happening out there today. You can see China is the center of everything. Everything in basically the orange color is where China is effectively the largest trading partner of that country. So you obviously got all of Europe, you can see that there, the US, and then basically Russia, India, obviously ourselves, all having China as their single largest trading partner. And it's really the capital of the world in terms of anything to do with trade and supply chain. And that's been in place now for probably the last 20 to 30 years. But that is changing. And we've got some scenarios now where we've got some unrest in East Asia. Next slide, please. And this really tells the story here of what's happening as tensions are evolving overseas between particularly China and Taiwan. And it's incredible that you think of that small passage of water between those two countries, that 88% of the freighting ships pass through that strait, and particularly in the first half of 2022. It's an incredibly important piece of water, and that if there's continued tensions between China and Taiwan, it's going to disrupt things even further than what they already are today. A real example of that is when you look at the semiconductor market. Basically 65% of that you can see there is through Taiwan, 18% through South Korea, China holds 5%, another is 12%, but all of that routes through the Taiwan Strait. So if there's disruption there, obviously these semiconductor markets are vitally important for all our IT and computer spend across the world. So the disruptions will be enormous. So what are people actually doing? We just get into the next slide. So basically, China is the nerve center. You can see it here now. The European Union, Russia, Japan, everybody is trading with China, but it is starting to shift. The peak of investment in China was actually in 2020, where from there onwards, and particularly I think with COVID and other things that happened, the direct investment into China actually halved in 2021. So the world began to look at China as a potential risk and started moving away from their investment from there into other areas across the world. The outcome of all of this is people needed to find, or companies needed to find, an alternative. So they started the great uncoupling, as we're starting to hear about it now. and it's happening at pace, and it's a very interesting situation as we watch it unfold. But what are the impacts of this? So we're obviously decoupling, and we've obviously got unrest in Asia as well. And we're seeing it play out across three pillars that we see, particularly around which impact supply chains. So commodity prices, and obviously which is leading to our inflation pressures now, are flying all over the place. And they're not always flying in the same way. It's very interesting to watch how that's playing out. Basically, when Russia invaded the Ukraine, oil shot through the roof, but conversely, wheat and barley and fertilizer fell through the floor. So we're getting a real juxtaposition on commodity prices as it flows through. The governments are also stepping in now and saying, right, what can we do to de-risk the supply chains and to get control of the situation? So they're starting to look at tariffs and also subsidies across industries and really militarizing the supply chain and the economies as well as what's happening out there. So things are heating up in that space as well. Some say to the bad old days, but others are saying it's all part of this decoupling process. But the real outcome for everybody is that pricing is becoming incredibly hard. Companies out there now have got risk everywhere. Their commodities prices are moving both directions. Forecasting demand and understanding risk in the supply chain is becoming even harder as time is moving on in this very volatile market. So what have been the responses to date? No great surprises here. We're seeing 6 key things happen as part of this process. The reshoring. So economies are now bringing a lot of the manufacturing back onshore. And they're doing that, and again, encouraging people to do that through subsidies and tariffs and whatnot to make it more economically viable, which is quite interesting. The other thing we're seeing is a concept called friendshoring. So looking at allies or partners such as India, potentially Thailand, Bangladesh, places like that, as an alternative to China to sort of have a more aligned risk profile to ourselves and the other Western countries. So there's a lot of that going on as well. Again, mixed success in that area. The next 2 points are really around sourcing and having diversified supply base. It's very interesting now that where you potentially would just work with one supplier, centralize with that one supplier, drive the best cost and outcome, that it's changing now to avoid the risk that's happening there. So actually broadening out the supply base and having strength in having multiple suppliers across multiple regions is really becoming a theme that we're seeing a lot of at the moment in terms of trying to reduce that risk in the supply chain. Now come the 2 important parts. This is the 2 bits around technology play. So there's a lot of investment going around in traceability. Blockchain technology particularly is being used, but other traceable technologies are also being adopted. As people can see more detail in the supply chain, they're more prepared to accept potentially there might be a delay here and there, but as long as they have visibility. So a lot of companies are investing in that traceability technology to make it more visible to consumers about where their products happen to be. The final part is automation, and we'll dive into this a little bit more, but there's a lot of work now with the Internet of Things, robotics, AI, which we'll lean on a lot in the future stream of the presentation, to really streamline and to get rid of the manual and time-intensive tasks that are happening with planning and trying to work all these myriad of complexities out there in the market at the moment. So really interesting. What is the global response to date? And I was really staggered when we started looking at some of the numbers and what companies are doing today. So EY, Ernst & Young, for those that don't know, at EY supply chain survey found that 57% of companies have already established new operations in 1 or more countries in the past 2 years. So they've already started the decoupling process, and a further 53% plan to do that in the next 24 months. That is a seismic shift away from what was traditionally very much a centralist model of send it to China, consolidate to get the best price and the best outcome. So what does this mean for Australian manufacturing? Is there a possibility and a world here where we can be part of that picture the great decoupling, and we really think that it is. Australia has a long and proud history of manufacturing. In the last 30 to 40 years, though, that really has there's been a decline there as we've lost some of the more heavy industries such as car manufacturing, some more of the industrial type manufacturing that's happened. So there is a resurgence that we're looking at, and there is a potential there for looking at maybe advanced manufacturing, but maybe not the old ways of doing things, because basically that time has passed. But there is with the new advent of renewable energy, things like solar panel manufacturing, battery manufacturing, things like that, there's a real opportunity there. So why is all that part of this picture? Sorry, Ali, I just need to go back up a slide. The real story here is about the resource profile. We have all sorts of things in our backyard. We've got aluminium, we've got copper, zinc, rare earth processing, and nickel, silver, all in abundance in the country, all of which can be used to actually be part of an advanced manufacturing setup for the renewable energy revolution that's happening. And we need to be part of that. We don't want to be shipping these resources offshore, sending them off to other countries and having them processed offshore and then brought back. We actually have the capability to do that here and now. But the big question is, how do we actually do it at the right cost and at the right with the right timelines, with the labor constraints and everything else that we have in there? This is not a new story. We've been talking about this for a long time, but the opportunity is now really to leap into this. And I think we now have to look at the technology we have available to make this happen. So we jump into the next slide. We basically are now in a position where a little bit of a history lesson of technology that we've got available to us. So in the 60s and 70s, we had a thing called MRP. Most of you should know that or be aware of it. It was really a basic material requirements planning setup where the system would look there and say, I need this material to make this product, end of story. In the 80s, it evolved a bit further to look at also supply and demand. So effectively then the production was actually trying to align what was happening in the factory to what was happening with consumers and demand out there, which was a bit of an evolution from MRP to MRP2. In the 90s, actually, we bolted on finance platforms to MRP2 to come up with ERP, which looked at having finance platforms, accounts payable, accounts receivable, all integrating with the business functions across the enterprise. Everybody knows in the early 2000s, the internet became available. And what that enabled ERPs to do is actually stretch from outside the four walls of their premises to the entire globe. So that's where the great outsourcing happened really to China, because you could then stretch the ERP and planning platforms all the way over to China and integrate them into your enterprise, which is what brought it on there. But where are we today? The future of ERP is really about integration with artificial intelligence. We're not seeing a lot of this yet, but it is coming, and we'll talk about a couple of examples of that. The ability to basically run infinite planning scenarios around data variables and come up with real-time outcomes and decision matrices on things like weather patterns, things like that, can be used to come up with the best outcome. And those capabilities are now needing to be built into the ERP systems and will happen over the next certainly 12 to 18 months. We're going to see a lot of momentum into that. So what does this look like? You're looking at a position where by integrating AI and ERP, you can actually build a very resilient enterprise and build a very resilient future based on being able to take into account all the things that you currently can't. Things like, what if there was a war between China and Taiwan? What about the resource shortages that are going on? We've had some industrial relations changes. I'm not sure if that's going to impact resource shortages or whatnot. There's ESG as part of this picture. There's weather disasters, floods, and everything else that we've experienced, and that's also been impacting supply chains incredibly. Regional restrictions, local policy, tariffs, all provide a framework of decision making that the current ERP platforms by themselves cannot really deal with. But combining AI with ERP together, you can actually build out the best possible outcome for the for your business and for your enterprise. And also that's the way that we'll be able to do this for bringing home some of these manufacturing and advanced manufacturing technologies back to Australia. It might all sound like a bit of a pipe dream, but it is happening right now. So I love this case study. It's fantastic. So the NHS, the health service in the UK, had a particular problem with supply of blood, red blood and platelets. And it was a particular issue because platelets have really only got a very short lifespan. It's about 7 days after collecting them, they basically die away. So the NHS had to ensure sufficient supply because this is life-saving material, but also make sure that they didn't waste it as part of the process. So what they did is they have a full ERP supply chain platform there, and they embedded an AI solution as part of that. Within 6 months of actually doing the machine learning and the AI build, the platform could actually look at demand, stock levels, the donor centers, what they were doing and the behaviors in there based on weather and everything else. They actually saw a 54% reduction in expired platelets and 100% reduction in ad hoc transport. So having to run around with emergency vehicles and things like that to basically maintain an incredibly high full delivery rate for the particular service. So a fantastic case study, life-saving case study on how AI combined with ERP drove an optimal outcome. I have flown through that. I don't have too much more to put to this, but the future is bright when we look at it. The unrest that's happening in East Asia now, we don't believe will subside, but we think the opportunity for Australian manufacturers and supply chain companies to embrace ERP with AI to handle all the myriad of variables that are happening and the risks that are flying around out there in the world at the moment provides an untold opportunity for us. And we'd love to help anybody if they want to look at that in more detail. I'm now going to open up for any questions.
Hi, Grant. So yes. It's Ali here. We've got a question around with the tension, I think, and the possibility of it potentially resolving in 2023.
Yes.
Do you see some of these trends reversing and I guess going back to pre-COVID?
It's a great question, and I think the answer is no. Basically, the shift is already on. I think I mentioned earlier the direct investment into China fell by half in 2021. That fell again by half in 2022. So organisations and governments around the world have made the decoupling process real. And even look at North America, for example. There's anecdotally the shift towards sending the manufacturing down into South America is already happening as well, and they're even utilising resources up in Canada to be part of that picture. So China will always be a big part of this. If it does blow up, then obviously the rest of the world it'll still rock the rest of the world. But I think the economies globally, governments globally have already made their minds up that this shift is happening and it's going to continue to happen. And using AI and these ERP systems combined is only enhancing that capability.
Fantastic. Got one more, which is what is so there's a couple of on the screen. There are a couple of areas that probably you can tackle piecemeal. Is it possible to tackle it piecemeal with AI, or is it really a wholesale change with your ERP?
You can tackle some of this by having AI standalone, but the real power comes in when you actually embed it into the ERP decision making. ERPs are purely built to just say, show me the best cost and show me the best time. That's the way they've been created and whatnot. So you could run an AI platform by themselves, dealing with some of these scenarios that you're talking about, and then try and embed that manually into ERP. But you probably get a suboptimal outcome. It's when you embed the whole picture and do what if analysis across both platforms that you get the full outcome there. The more variables you build into it, obviously the more complex the model, but the better outcome as well. As you continue to train the system around what happens with weather conditions, ESG variables, commodity prices, that's climate risk, all these different things which are happening around the world, including interest rates flying around the place, all need to be built into these models to come up with the best possible outcome.
Fantastic. That's all the questions I can see. Maybe
Awesome.
see if one or two come through in the next couple of minutes. Otherwise, I think that was fantastic.
Thank you very much. We'll sign off from here. Thank you, everybody, and hope you all have a great day.